All right, in part three, we're going to continue examining and comparing Tiffany and Flower Foods, but you can see that the only real similarity in here is the sales numbers, right around $4 billion each. We use a common size income statement to facilitate comparisons between two companies. Usually, two companies with very different sizes. Both these companies have roughly the same level of revenue, but they have a different level of profit. And we can see that in these ratios. A common size income statement basically just takes, let me try and make this a little better. Okay, well, it's not cooperating. There we go. All right, a common size income statement divides all the numbers on the income statement by revenue or by sales. And thereby, everything we see here is as a percentage of sales. The first company on our list over here, Tiffany, we can see their cost of goods sold is right around 37.5%, as compared to Flowers Foods, right about 52%. So the cost of goods sold is higher for Flowers. Now again, I mentioned in the other video, it doesn't mean that flour is more expensive than gold and diamonds. It means that the price that Flowers Foods charges over and above their cost of goods sold is lower. And that's because there's a lot of people out there selling flour and selling bakery goods. It's a very competitive business, as opposed to diamond watches and stuff like that. Diamond watches, not so much. You don't see a whole lot of stuff being sold. Everybody buys bread every week. How often do you buy diamond rings? Well, I've bought 2 over the last 33 years. So give you some idea. Well, let me show you how this works. If you take the cost of goods sold, and this is for 1 unit. Let's say that we have a $1,000 watch, and then we decide to set the sale price on that watch at 3 times cost of goods sold. That'd be about $3,000 gross profit. Would be 2,000, and then that would be gross profit margin of right around 67%, which is similar to what we're seeing for Tiffany's. Okay. Now, if I did this same thing, if I took $1,000 worth of bread and Flowers is selling that, and they can sell that for about $2,000. Notice that for the same $1,000 cost of goods sold, they just can't mark it up as much. This is called markup, the amount you charge over and above the cost of goods sold. Okay, so as a general rule, when we're looking at the gross profit margin, we're getting some idea of pricing power in there, how much you can pass those costs on to your customers. Notice that both companies have a selling, general, and admin expense of roughly 40% of revenue. The depreciation expenses, which are actually tied more closely to assets than they are to revenue, but they're both 4 or 5%. Gives you operating income of roughly 6% for Flowers and 16 to 20% for Tiffany. Okay. If we get down to bottom line, Tiffany's is earning in the last year 12% for every dollar of sales, as opposed to 4% over here for Flowers. That doesn't make Flowers bad people. It just means they're in a very competitive business, and that's just the way it is. So we can make comparisons between two companies in the same industry and also see how they work against one another. But in this instance, we're comparing 2 really different companies to get a better idea of the types of things that looking at common size income statements can tell you about the 2 companies. Flowers Foods doesn't make much profit on every sale. That's because they can't mark up the price very much. They're selling bread, and bread is just a commodity. Sunbeam bread and Publix store brand bread, nobody really sees a lot of difference. As opposed to buying your significant other a diamond ring so she'll spend the next 10 years with you before divorcing you. You know, the markup on those things is pretty significant. All right. So that'll give you some idea how we use common size income statements to make comparisons, not only between two companies, but also over time, because we do see things like that income tax expense. That was a one-time thing, but it dropped like a stone. You can actually track changes over time. There's just not a lot of changes in either of these companies.